Today, the crypto sell-off takes a pause. BlockFi reportedly prepares to lay off workers and declare bankruptcy, and FTX equity holder Kavita Gupta discusses the ripple effects of the exchange's collapse. Welcome to CNBC's Crypto World. I'm Jordan Smith. Digital currency prices bouncing this morning alongside solid gains on Wall Street. By noon Eastern, Bitcoin traded just below $17,000, Ether jumped to $1,200, and Solana climbed to $14. Okay, let's talk about the top stories, and starting with breaking news. Embattled crypto lender BlockFi is bracing for bankruptcy after FTX's demise. The Wall Street Journal is reporting that the filing could come after the company halted withdrawals last week, citing significant exposure to FTX. BlockFi sought emergency funding from FTX in the wake of Terra's collapse in the form of a $400 million line of credit. Next, funds from Sam Bankman-Fried's trading firm Alameda Research are also on the move. Decrypt reported that Alameda transferred more than $2.5 million worth of Serum, FTX, and Uniswap tokens to wallets belonging to the firm. The latest transfers follow millions of tokens like BitDAO, Sushi Bar, and Render that were moved into wallets marked as belonging to Alameda throughout the weekend. Decrypt estimates the firm now holds $89 million worth of assets right as bankruptcy proceedings move forward. Last, a new bankruptcy filing reveals FTX may have more than 1 million creditors, pointing to the potential huge impact of its collapse on crypto traders. Last week, when FTX filed for bankruptcy protection, the company indicated that it had more than 100,000 creditors with claims in the case. But in an updated filing today, lawyers for the company said that there could be more than 1 million creditors in these Chapter 11 cases. The lawyers noted that usually in cases like this, debtors are required to provide a list of names and addresses for the top 20 unsecured creditors, but given the scale of its debts, the group plans to file a list of the 50 largest creditors by Friday. The lawyers also wrote that over the past 3 days, FTX has been in contact with, quote, dozens of regulators in the U.S. and abroad. All right, on to our main story. Crypto World's Talia Kaplan spoke with Delta Blockchain Fund founder and general partner Kavita Gupta. She's an equity holder in FTX, and they spoke about the ripple effects and lessons learned from the exchange's collapse.
You are an equity holder in FTX, so I want to start off by asking you about your reaction to everything that unfolded last week, really in the span of just a few days. I mean, FTX went from being valued at $32 billion just a few months ago to needing an emergency lifeline. What is your reaction to all of that?
I want to clarify something before I go deeper into your question. It is not, our investment is not through Delta, not through Consensus Ventures. It's through a fund back I LP'd into from Asia. And the investment was way earlier than the whole $1 billion drama started happening. So we have seen the company being built up, right? I've seen the company from very beginning all the way 19, 20. And it is sad. First of all, I want to say a lot of people are taking pot shots at a big failure in this space. My first reaction is it is sad. My second reaction was I was just amazed the sheer, the level of this, just the way the house of cards went down, and everyone in the world was watching it as it was happening on Twitter. Like there was no announcement, there was no sharing, there was no investor note. In fact, I feel like every investor was scrambling to even figure out it was real or it was some sort of a crypto Twitter joke happening. I remember when we first started seeing it on Twitter and people were like texting on Telegram on each other, is this happening? What is happening? Da da da. Including FTX employees, very senior investors, which were in the last round, a round before, which is $32 billion round and much beyond. They also had no idea. So forget about the early investors into the space. In fact, because of Delta, we directly went into seeing which are our other companies who are going to get impacted by this, whether they have treasuries at FTX, whether they have a trading volume at FTX, like where, how, this is the whole cascading impact going to come. And we are still figuring that out. So I think sad, amazement, and unbelievable sci-fi drama is what I would literally call the whole situation to.
Some of the crypto exchanges investors are now being scrutinized. Some people are wondering, how could so many big investment firms pour a collective $2 billion with what seems like little due diligence? How could something like this happen? Perhaps, some signs were overlooked, do you think?
I think crypto, at least in last two cycles, to be honest, whether it was end of 17 or it was this time. The FOMO from the traditional funds were crazy because they had the capacity to raise multi-billion dollars, didn't really have the track record or the expertise to go deeper diligence into the space. And even some of them do, they have some of the best technology people they were able to hire over time. They didn't really use all the resources internally just to get into the hottest deal out there. And people inside who have been in the space for a long time have been talking about this, saying, what are the diligence metrics of it? How much balance sheet do you look? I mean, everybody on the street knew there is a close connection between Alameda and FTX. When they invest, it's always two of them together. One, you get a trading platform on FTX, Alameda is on your balance sheet, on your cap table. But during the diligence, did people really ask for Alameda's diligence also as the part and parcel of it? I doubt it. uh, so I feel like it is like the way it happens on Wall Street, the way it happens in the Web 2 world. When a particular segment, sector, or a founder gets really hot, people just keep on, who's the next one you're going to dump into? Like, this reminds me of the WeWork era, to be very honest with you.
Interesting. I was going to ask you that, how would you categorize this whole situation? Because I spoke with some people who say this is crypto's Lehman moment. I spoke with people who say this reminds them of the Bernie Madoff Ponzi scheme or the Theranos controversy or the fall of Enron, or, even comparing it to the dot-com bubble that burst. Some people say this is a cleansing time for crypto, just like in the 90s when the internet was going through its cleansing period and only the strong survived, like Amazon. So, how would you categorize it? Do any of those analogies resonate with you?
I think combination of all of them, right? Because all the examples which you took were like, the perception was this is the most successful thing you can do. And then suddenly people are like, oh my God, what the hell happened here? And I think it was the same thing just a month back, 2 months back, when all the companies out of Celsius and 3AC were basically going down. Sam was being called as the crypto Jesus, right? Coming, saving everything, and like trying to have a bailout plans for BlockFi and Voyager and bunch of other places, without us realizing that it was a house of cards which can basically get smashed anytime, right? So it is that unexpected. Lehman, because they did go for a bailout and everybody was like, of course it has to be bailed out, otherwise the industry would die, and it didn't get a bailout. There is a cascading impact, but the industry is going to continue. For me, it is way more closer in my memory, or the way I connect with it, as WeWork, because you had a charming CEO who just walked in, kept on pushing for the valuation, and the underlining promises, or the reality was very, very different, but you were able to outsmart some of the so-called smartest people in the space.
So, according to a new bankruptcy filing, we're learning there could be more than 1 million creditors, a lot more than we initially anticipated. What do you think the impact of that is?
Having 1 million accounts, that's huge number, especially at the global level, especially when everybody, even from the traditional world, is talking about hitting recession. It is very, very sad. How can they all come together to have a class action lawsuit in Bahamas? How much does the US system works? I think this is going to be an interesting play to watch. How is that going to come together, whether people get the money? It does remind me of Mount Gox, all the way back in early 2010s. But uh, the difference out here between Mt. Gox and this is a lot of it was regulated. At least FTX US was very regulated. So we want to see, does that make US actually, and the regulations around it, way more favorable for people with respect to trust, if at least FTX US creditors get it, and then now we are figuring out what's happening in Bahamas. So all these island registered entities now have extra risk associated with them.
When it comes to future investments in the world of crypto, how does due diligence evolve in your view?
I just feel like this has opened up a lot of questions for investors, right? Even for us internally at Delta, we are rethinking about, oh, we should be asking, when once people raise money, where are they keeping that money? Something which we have never really asked. How are their treasury management solutions are? If we are investing into OTC platforms or exchange platform or on-ramp, off-ramp solution, what are their risk measurements? And are they going to share their risk management toolkits every 3 months with us? And even at the small project side, how is the risk management for treasury? I think it has definitely created a whole new section on a diligence document which has to be filled today. Said that, to be very honest with you, we are in a bearish market. We are going much more towards the all-time low in next 2-3 months. But I doubt 90% of the people are going to remember it once the all-time high comes and the FOMO kicks in again.
Okay, before we go, Crypto.com's CEO joined CNBC's Squawk Box this morning to weigh in on the fallout of FTX and what it means for the digital asset space. He argued that smaller cryptocurrencies may have to be delisted to protect consumers. We told you yesterday about his attempts to downplay concerns of an FTX-like liquidity crunch, saying that his firm had a, quote, tremendously strong balance sheet. This morning, he discussed the situation on CNBC, saying that the company is very well capitalized. Take a listen.
We are an open source contributor. We've never utilized it in a way that FTX did. We never used this collateral for any loans or anything. We run a very simple business.
All right, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.